CVNA, and Illumina. And with that, I think we will move on now to the actual market opening up and taking a look at that. Looks like we're opening up slightly higher. Justin, what do you make of the market action in the last few days here?
Well, day to day, it still seems like it's a little bit of this rotation. Yesterday it was materials, financials, energy, taking hits. Looking at the early going, those were leading a little bit. Not much, but that's what seems to be at least outperforming the market. So that can be a little bit trickier where day to day you feel like, it can be very easy to start switching lanes, right? Oh no, it's the energy and materials that are going. Oh no, it's the growth that's going. Yesterday was a growth day. So that can be tough, but if you have cushion, then you can kind of ride it out a little bit. And I'm still not sure that this is necessarily a big stick your neck out. Summertime, look, it's summertime, and then you get lower volumes. Sometimes it's just a little harder to read stuff. So it's just something a lot of times that I'm trying to get through for the fall. And that's not to say every time. There have been times. I remember in 2007, August is when something started, and it was a good idea to be there and get your positions, because September and October were incredible. So you take it as it comes, but right now it just does seem like there's a little bit of back and forth going on.
Gotcha. And Harold, how are you positioning yourself? Are you getting more aggressive over the past week or two, less so, or just staying in the stocks you've owned for a while?
I'm getting a little bit less. My internet's cutting out.
Yeah, I was wondering about that. I wasn't sure if it was you or for me or it's me.
No, I think it's on my end. But no, I'm getting a little bit less aggressive on the market. I was looking at the general markets page, and I was looking at the advanced decline line on both the S&P 500 and the Nasdaq, and you see both of those lines are they're starting to dip a little bit. Even though the market's going up, the advanced decline line is kind of flattening out or declining. So that's a sign that what I call the participation rate is starting to get a little bit weak. So this market it's a little bit long in the tooth. I go back to May 20th when the Qs got up above the 50-day moving average, and we're up about 11% since that date. So the market's, in my opinion, the way I'm looking at it, it's kind of right now. So being a little bit less aggressive.
That's a good point. And just as another way to look at the advanced decline line, I just sort of do it during the day, is looking at the Russell, and you can sort of see that similar. It's just this little bit of an increase, but then we sort of been trending lower ever since. It's up a little bit today, but definitely that's been an issue. Ali,
yeah.
What are there any sectors that you're looking to play in right now? Do you think that
I mean, it's earnings season, so there have been buying opportunities. There's been a little heartbreak. I know a lot of people in the Q&A wanting to know about Roku and Etsy, for example. A mover to the upside this morning, KLIC, although we've been talking about other stocks in the chip equipment group. So I think that's the biggest thing. I totally agree with you guys. You can't completely ignore the stocks that were working earlier this year, because we are seeing these mini rotations, but you can't completely count out technology stocks either, even though we are seeing, some of those more high octane big winners from 2020 like Etsy and Roku not having great reactions to their reports. So it's just making sure that you're following the rules and not making big bets right ahead of earnings, and protecting yourself if you do get caught in a situation where the stock reacts poorly to results.
Well, why don't we start off with Etsy for a moment? What do you, how would you read Etsy? That was not a very good reaction for sure.
Yeah, I remember when it was lagging in the spring, we had set a trend line from the highs, just saying, okay, let's just, if it clears this trend line, that'll kind of put it back on our radar. Something like that, something maybe even a little tighter through the 227 level when it got back
Yeah.
above the 50-day line. Maybe that was a super aggressive entry when it touched down to the 200 level. But I think this one probably would have been a tough hold into earnings. Uh, so, seeing a stock gap down 11% is not great, and it's also below its 50-day and 200-day lines. So I just think if you're down on this stock more than 7 to 8%, you got to let it go. But at the same time, it is trying to come off of its lows. So we do also have, those scenarios where we look at the intraday charts. You don't want to have that knee-jerk reaction. Generac, for example, what a day it had after its earnings report, coming all the way down to its 50-day line, huge loss, and then was able to close up so nicely. But I think that was a completely different stock heading into the report to begin with. So yeah, it's tough. I don't think that it looks like one of the leaders yet. I think it needs more time.
I think there's concerns when you think about when you have Etsy, you've had Amazon, Pinterest talked about slowing user growth, and I'm going to go to Roku now, Justin. It does seem like some of those, like stay at home stuff, some of those trends are away, like that have just gone away in any case. But in any case, what do you make of Roku at this point?
Yeah, I mean, we had this on Swing Trader. We had this on Leaderboard. Swing Trader. I got out of it a little bit earlier. I think we had it on Swing Trader, but I know we had it on Leaderboard.
Yeah.
And we got it on that breakout, and it just didn't work out. And so here we were going into earnings, and we lost all of our cushion. We were down like I think 6%. And so we had to exit. Now we were saying like, look, if people had an earlier entry, maybe you could have held it and everything. But this is why it's important to be disciplined. This is why it's important that we try to go into the earnings report with a cushion. I still like the stock personally. I think that it still has a strong future. But as you said, it's people are kind of looking at the short term. What have you done for me lately? What are you doing right now? And I also think it's hard for a lot of these companies to do their estimates. I mean, giving guidance has got to be just one of the toughest things right now. And so you miss it by a little bit, you just get punished. I mean, this is still like, I look at the numbers, and I mean they're good numbers, but yeah, you missed on your subscriber growth, and that's what it's all about for companies like Roku and Netflix and everything. So it's off its lows. I still think this has potential, but yeah, if you bought recently, it's just not, your timing is wrong. So you just have to kind of wait for another time, and that's okay.
This reminds me a little bit now. It's doing better and it's not down as much and it's trying to rally already, but it's like, it reminds me of PayPal, where it's like, okay, Roku had sort of an early entry here, like there was even other ones, but if you use this 397 and 97, you're down even there. I mean, there was a decent enough cushion that you could have justified it, but the same thing happened with PayPal where, oh, there's this cushion, but that's why you have a cushion. It's like it fell and you still could get out by the time and still with a small gain, kind of thing if you bought off the early one. But this is why we talk about it. Obviously, if Roku had surged 20%, everyone would say, I don't need a cushion. Now I've got a cushion, it's like, but this is why we look at it that way. And Harold, Revolve, that was one that we really, really liked. And honestly, I still don't know what's going on. Maybe people know why it was down, was so negative, but what do you make of, what would you do with Revolve now?
If I were in it, I would be getting out when you get a sell-off below three major moving averages. You got the 10-day, the 21-day exponential, and the 50-day. It's below those three. So if I were in this stock, I'd be getting out. So you had that trend line there. if I gotten in using that trend line, I'd definitely be getting out of this stock here. And look at the volume to the downside. That's huge volume. You rarely see volume numbers